Hyundai Motors has filed its paper for an IPO to list right here in India. And as per some sources close to Bloomberg, a potential listing is expected around September or October this year. Ahead of its upcoming IPO, how does Hyundai compare to its competitor Maruti Suzuki? Watch this video till the end to know more of what could be Hyundai's potential share price and which stock should you bet on. While currently Maruti sells 3 times more cars in India than Hyundai Motors, what's interesting is that margins for Hyundai are much higher than that of Maruti at currently around 12% versus 11.6% that of Maruti Suzuki. While comparing on profitability though, Maruti scores higher than Hyundai Motors due to 3 key reasons. First is on lower depreciation, higher other income, and finally a lower tax that Maruti pays compared to Hyundai Motors. Now, for a car manufacturer, depreciation is a key element to watch out for, and that is much lower for Maruti Suzuki currently. Other key benefit with Hyundai Motors though is the strong export sales. Currently, 25% of all cars produced in India for Hyundai are exported to other countries around the Southeast Asia region, and this percentage of 25 is much higher compared to 10% of Maruti and just a mere 1 to 2% for players like Tata Motors and Mahindra. Now, this shows that Hyundai's products are made in India, are very well accepted around the world and support margins as well as profitability as well. When we compare its market share, although Maruti is the leader with 41% market share, this is down from 50% it enjoyed for almost a decade until a couple of years ago. Last year, we have seen strong competition from the likes of Tata Motors as well as Mahindra, and despite this, Hyundai has managed to maintain its number 2 position in terms of sales with a total market share of 14.6%. Finally, on valuation comparison, the company is rumored to have a target valuation of roughly $25 billion or 2 lakh crores. Taking this into consideration, along with profitability and revenue, puts Hyundai valuation to slightly higher premium compared to that of Maruti Suzuki. While return on equity, a key metric tracked in the industry, is higher for Hyundai at 22% versus 15% of Maruti. Other metrics such as market cap to sales, EV by EBITDA, as well as market cap to revenue, which is essentially price to sales, Hyundai's potential IPO valuation is at a premium to that of Maruti. And this is primarily driven by Maruti's higher profitability. But there is one thing to note here. Post-listing, it would be a key monitorable on what kind of policies the Hyundai incorporate on profitability and especially on depreciation as well as other income, which we've discussed here. Now, finally, if you just put a cherry on top for the valuation picture, if you use the current valuation of Maruti Suzuki, which is price to sales of roughly 3x, we can estimate that Hyundai will be targeting a valuation of roughly 2 lakh crores or $25 billion. Since we know that Hyundai will be offering 14 crores shares in its IPO, we get a potential price of roughly 2,563 per share. Going forward, the next step would involve Hyundai confirming the filing valuations and would become the 4th major listed player in the passenger car space after Maruti, Tata Motors and Mahindra, and the first such IPO of a car maker after 20 years. So, will you be investing in the Hyundai IPO? Let us know in the comments below and stay tuned to NDTV Profit for the next video breaking down top stocks for you that you should bet on.